Bitcoin just flash crashed to 110K in seconds. And here's the truth. It wasn't random, it was calculated. Market makers, leverage traders, and whales all just played a massive game of chess with your money. If you don't understand what just happened, you're going to miss the bigger picture. This wasn't the end of Bitcoin, it was the setup for its next massive move. In the week ahead, we've got reports and earnings that could shake up the entire financial world. And Bitcoin is right in the center of it all. What's up, family? It's Coach Masi, and you're locked in to the Daily Hodl. This is your go-to show for Bitcoin and financial news that cuts through the noise and keeps you sharp, disciplined, and as always, prepared. Today, we're diving into Bitcoin's shocking drop to 110K, why these liquidation events happen, and what the week ahead looks like with massive economic data and earnings on deck. Okay, today, Bitcoin dropped hard and fast, hitting 110,000 before bouncing up. Many retail traders panicked, but this was a classic move by market makers over the weekend with low volume. See, liquidation hunts. In crypto, especially with Bitcoin, there's massive leverage. Traders borrowing 10x, 20x, even 100x leverage create juicy targets for whales and exchanges. When too many longs build up, the market purposely drives price down, liquidating over-leveraged positions. That flushes weak hands out and allows institutions and whales to scoop up Bitcoin at a discount. Think Binance. Okay, so this is not new. It's been happening for years. The difference now is Bitcoin is mainstream, and these liquidation events are bigger because more money is in the system. So here's a key takeaway for you hodlers. If you're not using leverage, these moves are noise. But if you're chasing leverage, you're playing against the house. And guess what? The house always wins. Don't play in the casino. No crying. This is why market makers play this game. Market makers provide liquidity. They need volatility. Bitcoin's unique mix of 24/7 trading and high leverage makes it an easy playground for those that are on those exchanges. Liquidations are essentially free money for the system. Billions of dollars just evaporated from reckless traders today, and they usually get them on the weekends or overnight. Here's your education point. This is why hodling and long-term conviction beats leverage gambling. Michael Saylor didn't borrow billions to chase 20x leverage. He simply bought every dip and top with conviction. The Bitcoin drop today wasn't a sign of weakness. It was a reset, a flush, a setup for stronger hands. Hopefully hands like yours. The week ahead tells me this. There's basically a full list of events that are about to happen, and it's really going to get interesting. This week is loaded with events that could decide whether Bitcoin climbs higher or chops sideways. Let me walk you through day by day. So Monday, we have new home sales. Think housing doesn't affect Bitcoin? Think again. Housing is a reflection of consumer demand. If new home sales are weak, the Fed gets closer to cutting rates, and that's bullish for Bitcoin. If sales are strong, the Fed stays cautious. Tuesday, Consumer Confidence Report. This one tells us how Americans feel about spending and the economy. High confidence means the dollar stays strong, short term, which could be bearish for Bitcoin. Weak confidence, people hedge and Bitcoin shines. I'm a firm believer that Bitcoin shines in both. Wednesday, Nvidia earnings. Nvidia is basically the heartbeat of the AI boom. If they crush earnings, the stock market rallies, and Bitcoin rides the wave. If Nvidia disappoints, the NASDAQ tanks, and Bitcoin could feel some pain during the week. Thursday, GDP report plus jobless claims plus FOMC Waller's speech. Thursday is huge. We've got the Q2 GDP report showing the health of the economy. If GDP is hot, the Fed keeps rates higher. If GDP slows, markets expect cuts. And that's rocket fuel for Bitcoin and Bitcoin owners. Now, on the same day, though, we've got jobless claims. Rising claims means the economy is weakening, which is bullish for Bitcoin. Falling claims mean strength, less chance of cuts. And then a Fed official, Christopher Waller, he's speaking. If he's dovish, Bitcoin could pop. If he's hawkish, markets might tighten up. Now, he's not Jerome Powell, but it's good to know what they're thinking. On Friday, core PCE inflation data. Friday gives us the Fed's favorite inflation gauge, core PCE. If inflation cools, the Fed is closer to cutting. If it heats up, expect maybe some delays. And when the Fed delays, markets stall and Bitcoin chops. Okay, bottom line. This entire week is a tug of war between economic data, the Fed's response, and Bitcoin's reaction. And when the Fed eventually eases, Bitcoin doesn't just move, it rips. So let's do a quick 3-point recap. Today's drop wasn't Bitcoin falling, it was the system punishing leverage. 2, market makers flushed weak hands, and the Bitcoin itself is still standing strong. The week ahead is loaded, number 3, with housing, consumer sentiment, Nvidia, GDP, jobs, and inflation. Every one of those reports could spark some sort of fire for Bitcoin this week. And remember, this is not financial advice. It's for education only. Now, I want to hear from you. Do you think today's Bitcoin dump was just a setup for the next big move up? Or do you think more pain is coming from this week? Drop your thoughts in the comments. I read every single one of them. Don't forget to hit the like button, subscribe to this channel, and share this with people that love Bitcoin news as much as you do. I just want to thank you for being here every single day. If this channel helps you grow and keep spreading the Bitcoin truth for other peoples, it can really be beneficial for a lot of people to get rich. But again, not financial advice. So that's your Daily Hodl. Stay sharp, stay disciplined, and as always, Lead.Pray.Hodl. I'll see you in the next one.